Well, the big four banks and Macquarie have had it pretty much all their own way for a long time. But a sea change is happening with major implications for the banks, their customers and their shareholders. Today, APRA, the banking regulator, has told them to hold more capital against their mortgage books, a move that will cost somewhere around $12 billion. As it stands, CBA, ANZ, NAB, Westpac and Macquarie are allowed to use their own mathematical models to decide how much they need to hold in case the loans go bad, currently around 16% of the mortgage loan book. But as from July next year, that'll have to rise to 25%, closer to what the second-tier banks and credit unions hold. The big four were out quickly warning it'll be customers and mortgage holders who'll pay. But would they really raise their rates and open the door to smaller players to undercut them? Well, the alternative is lower returns for shareholders, and that won't be without costs to the banks. This has nothing to do with competition, though. This is about strengthening the financial system. And it comes from a regulator asserting itself on the big players. Here's Neil Woolridge.
It's becoming something of a habit. Last week, the banking regulator warned that Australia's Big Four fell well short of the world's top 25% in terms of capital and were not unquestionably strong. Now, the Australian Prudential Regulation Authority says the risk weightings the major banks apply to home lending are inadequate and need to be lifted.
It's part of that journey towards increased financial stability, and therefore it's good news for taxpayers, because essentially there's less risk that taxpayers would have to bail out a bank in a downturn.
Strongly, don't let it go now.
Risk weights are used by the banks to determine how much capital they need to hold against loans. The lower the weighting, the less capital that needs to be set aside and the more they can lend. Until now, the Big Four and Macquarie Group have been able to set their own risk weights on home loans. But now APRA says they'll have to apply a minimum average risk weight of 25% to residential lending, up from an average of around 16%.
What will be quite interesting going forward, it will be how the major banks choose to be competitive in the housing market. So they choose to continue to price aggressively to take market share from these smaller banks or regional banks perhaps. That is quite an unknown at this juncture.
The Big Four say the new measures are in line with what they had expected, but are forecasting they'll need to raise between $10 and $12 billion in extra capital collectively. In its statement to the market, Westpac warned the cost of holding extra capital would inevitably be borne by customers and shareholders. But the news caused barely a ripple, suggesting it will have a limited impact on bank profits.
I expect to see discounts on mortgages down a little. I expect to see deposit rates cut a little, and I expect to see volumes of mortgages written dropping slightly. And putting all those things together, my view is the profitability of the banks are hardly affected at all by this.
These companies have got significant pricing power. So we would anticipate that consumers might be bearing some degree of that new capital requirement via more expensive housing loans, for example.
While the measures will go some way to removing the major banks' competitive advantage in home lending, all other lenders regulated by APRA will still use a standard 35% risk weight on residential mortgages. That still leaves the Big Four and Macquarie with a significant pricing edge.
The smaller banks are still at a competitive disadvantage in terms of the capital. They don't have the same ability to raise capital, and they have to have higher capital weightings. So it's moving in the direction to equalise competition, but it's certainly not moving far enough in my view.
And Martin North doesn't expect the new rules will do much to address the record high lending to the mortgage sector, which he says is sucking the air from business loans.
Small business in particular is quite disadvantaged at the moment. They're finding it quite difficult to borrow at any cost, let alone at a good cost. And I don't think these capital adjustments are going to have much impact, to be honest.
The banks will have until July 2016 to adopt the new risk weights, but APRA says these measures are only an interim step until global rules are clarified.